Good morning. Welcome to this update on Tuesday the 7th of June. I'm Tom Colley and I'll be taking you through the markets and the news this morning. We're still very much in the after effects of the non-farm payroll figures that came out on Friday, which were extremely poor. Coming in way under expectation, which had a knock-on effect of a big weakening in the US dollar. We've seen a consolidation since then. We had a very important, or what turned out to be a very important speech from Janet Yellen, the chairman of the Fed, around 5:30 yesterday afternoon. She was somewhat hawkish. She said that positives outweigh the negatives. She acknowledged last week's jobs data, but she didn't give any indication of timing of any rate rise. So what she basically did was push any issue forward until a week on Wednesday, which is the 15th of June, which is the next date of the federal funds rate announcement and the statement and press conference that follow that. So the net result was she probably achieved what she wanted to achieve. She stopped any further decline in the dollar, but at the same time just led to consolidation. This morning we've already had the cash rate and the RBA statement from Australia, and the rate was held at 1.75% following last month's surprise reduction from 2% down to 1.75%. And we'll have a look at the Aussie chart in a moment. That has led to some Aussie strength in a market where we really don't have, or we haven't, with the exception of that, got any specific currency strengths. Therefore we haven't got any biases. Therefore things on a trading perspective are very quiet. For Phoenix Blue traders will be aware we haven't released a watch list this week. We were planning post this speech from Janet Yellen to potentially put out a watch list, but the net result has been that the position hasn't yet changed. Everything is just consolidating. So we are really waiting for something to happen or some specific move to take place before we'd make any announcement on that basis. Let's go over and have a look at Asia. We're only going to look at the Nikkei this morning. The Nikkei, yesterday we had a bullish day and so much a consolidation around that bullish day yesterday. We're still within the triangle we've been watching for a while. This reflects the US dollar JPY, the yen. We've seen a weakening of the yen over the last couple of days, or this is yesterday, and the overnight sessions or today so far. That is really against the trend of all other currency pairs where we have seen purely consolidation. We haven't seen any weakness from another currency in relation to the US dollar. This would suggest to me that there has been some form of intervention at this level, and if price comes back down to this level, I'll be looking to buy at that level, but with caution, reduced risk. Everything at the moment will be reduced risk until we can get some real bias back in the markets in terms of which way we see it going. So potential intervention from the Bank of Japan there. If you look across the other yen pairs, you'll find a number of those that are also at structure at this point. It's not as significant as it was, I think, when we were over here earlier in the year, where we had some very strong levels across all the yen pairs. But there is some structure on some of them suggesting that we are at a level. But again, that will be a potential opportunity, but it will be a very cautious trade. Over on the dollar, this is the dollar index. Well, as we can see, consolidation. This is the big bearish bar from Friday. We've consolidated around that. Yesterday, we had a bit of movement around Janet Yellen's speech. But again, for me, we're still confined within this triangle. A break below will remove certainly any short-term dollar strength bias. A break below the level here at 92.50 will be all bets are off, and we'll be looking at a close below there. We'll be looking at dollar weakness. Not something we anticipate, but we will watch the charts and respond to the charts irrespective of what we expect. We mentioned briefly the Aussie. The rate was held, and that in itself was sufficient to add strength to the dollar to break through this significant level and this trend line. This is possibly the only genuine trading opportunity that isn't intraday that I've found so far today. We'll be looking for a pullback to this level and the trend line to continue with the Aussie strength to the long side. That's a pretty significant level. As you can see, it's not really big. It's the thick end of a year since price has been significantly above that. And there's nothing particularly in the Aussie economy that suggests the Aussie should be strong. If anything, there's talk of another rate reduction in August following the June quarter inflation figures, because inflation is an area that they're very much struggling with at the moment. Over on the Swiss, the US dollar CHF, I put this here mainly because we've got no specific bias on any currency for strength or weakness for that matter, which suggests that we should be looking for range trades. I've highlighted a range here that I'll be looking to potentially trade on an intraday basis. I will be looking for price action trades. I won't be trading with limit orders because I haven't got that bias, but if I can get a reaction at this level which suggests price will reverse at that level, then I'll be looking for a long trade to the top of the range there, and similarly on the way back down should the opportunity arise. This is the Kiwi New Zealand dollar US dollar. Sorry, yes, New Zealand dollar US dollar. Again, we're in a consolidation. Why have I shown this here particularly today? Well, overnight tonight, we have the New Zealand rate announcement. Bearing in mind what the Aussies just done, if we see purely the rate held at the same level, that might encourage the New Zealand dollar to strengthen, push out of this triangle formation, and there's a significant level here. I'd be looking for a break above that and a pullback to potentially trade that long, as long as we don't get any US dollar strength appearing in the meantime. Over on the pound, well, Brexit's everything on the pound. Look at this the last 2 days, pin bar down, pin bar up, within the confines of this triangle formation. That's so in a 2-day span, it's gone from its high to its low. My personal opinion is that anything pound related now prior to the Brexit vote is purely a gamble on the next opinion poll, because that's what's moving the market. So I would be advising everybody to stay away from anything pound related at this moment in time. If potentially we break out of this triangle, unless it's on something more significant than an opinion poll, again, I won't be looking to trade that. I'll be waiting for the results of the Brexit vote. Over on the Canadian dollar, well, this is a very significant level. It's significant on this chart, but it also correlates with 50 US dollars on the crude oil WTI chart that I'll show you in the middle. You see we've got support over here, again, interaction right through here. That level, as I said, appears to coincide with the level of around 50 US dollars that we've got on crude here. We've got a rising wedge on crude. The norm is a break short from a rising wedge. I've got a couple of levels in here that I'll be looking for price to break, come back retest to trade short. Initial targets 44.50. Should that happen, probably more likely to prefer that trade on crude than on CAD at this moment in time. Okay, over on the S&P, well, we've been bearish the S&P all year so far. We're now at a point that if we get a close above this level of 2110, we will no longer be bearish. This is either potentially a double top or it is a move higher. I think any move higher between here and 2130, which is the all-time high, is a bit of a no man's land, and we may see price, if it goes in there, spending quite a long time. All the predictions are that if for the long side on the S&P is only very small percentage gains over last year's high. So in all honesty, this market may cease to be so interesting to us unless we keep below this level, and we would be looking for opportunities to the downside. A level around 2080 would be interesting. Real big level at 2040. A break below here, and we could see these lows. But this market seems to be not as reactive to rates. Rumours on the from the Fed, so we'll be watching it carefully, but we'll be looking for something significant to happen before we're back in that market. We're also at the moment having a look at trading commodities. If you trade commodities, we trade using our COT analysis, also seasonality. We're currently long cocoa, or we're looking for entries long in soybean and sugar. If you want to know more about those specific trades, email me at tom@phoenixblue.co.uk and I will send you a chart and an explanation for each of those, but I know not everybody trades those. Okay guys, that's it for this morning. As I said, we haven't put out a watch list for Phoenix Blue traders. There may not be a Trading Tuesday video today unless something significant happens, for the simple reason there is nothing really further to report. So rather than bore you with repeating what we've already said, we'll wait for something significant to happen. Okay, for anybody new to us, what you're looking at here is what we call our pure analysis, clean charts. We buy and sell with the institutions. We try to trade with the fundamental bias, or we do trade with the fundamental bias when there is one. We use the commitment of traders analysis, season analysis, that was difficult to say. And all this means we can use very accurate entries. We use 40 pip stop losses on majors and minors, which allows us to get in and out of the market quickly. It means we can be more profitable with a smaller number of winners. If you're interested in improving your results, visit our website www.phoenixblue.co.uk. If you want to talk to us directly, info@phoenixblue.co.uk. If there's anything about this specific video you want to know, I'm on tom@phoenixblue.co.uk. Okay, all the best with your trading today. Let's hope we do get some opportunity. Thanks for listening, and we'll speak to you tomorrow.